Hello, everyone. Let's give it a few minutes to let everybody join. Welcome and thank you for spending a little bit of time with us today. I know we only have 30 minutes, so I want to go ahead and get started. I want to welcome you all to our fourth webinar in our Adapt and Thrive series. Today, we are giving you the Market Pulse, a 30-minute deep dive into the forces shaping the U.S. talent landscape. My name is Jeff Johnson. I run marketing for Randstad USA, and I'm thrilled to be your host today. In the next half hour, we're going to cut through the noise and give you clear, actionable insights on what's driving the economy, the labor market, and the legal landscape so that you can sharpen your workforce planning and hiring strategies for what's to come. I'm not going to try to do this alone. I'm fortunate to be joined by three incredible Randstad leaders who bring unparalleled expertise across critical sectors. I'm going to have them introduce themselves and share a quick thought on what they're most excited to discuss today. So, Wendy, I want to start with you.
Thanks, Jeff. I'm Wendy Catino. I'm the General Counsel and SVP in Randstad in the US. I am really happy to be here. There's a lot going on in the law and a lot going on for employers right now. And I'm happy to navigate a few of those issues around AI, immigration, and DEI executive orders.
I'm Michael Gavin. I'm the Senior Vice President for our Business Professionals Division. I'd say that I'm excited to be here to help share some of the creative ways that employers are attracting and retaining top-tier talent in a very challenging, costly, or high-cost environment that we are in today.
Hi, everyone. Kim Ryder. I'm the Executive Vice President on our operational side of the business, which includes manufacturing, logistics, and skilled trades. I'm actually looking forward to a short but very productive conversation on how we're leveraging flexibility to help you optimize costs and build workforce resilience. Happy to be here.
Thank you all. I think we have a powerhouse panel ready to dissect the latest market signals and equip you all with practical strategies to adapt and thrive. If you have any questions for our panelists today, we do have a lot to get covered, but we want to try to answer some of your questions as well. So please start dropping them into the chat so that we can make sure we can get through as many questions today as possible. But let's get going with the overall US market outlook. What we've been seeing as we've come into the economic currents is what I'd call cautious optimism. We see a series in a sense of forward momentum with a healthy dose of volatility still in the air. That's due to trade tensions, geopolitical events, just general economic uncertainty that's undeniably shaping employer behavior, particularly when it comes to their long-term investments. So let's look at a few things that we look at. The first being staffing industry analyst, which forecasts that U.S. staffing is to grow at 1% in 2025, bumping up to 3% in 2026. This isn't a boom, but it's a steady march to what we'd like to see. Another positive sign is that core inflation has dropped to 2.8%, the lowest that we've seen in the last 4 years. This could genuinely ease some of the pressures on wages and those ever-presenting costs that we all feel. Unfortunately, the momentum is uneven. Manufacturing, after 2 months of growth, has stalled again due to ongoing uncertainty, and other industries like healthcare added a robust 54,000 jobs last quarter, followed by retail and sales associate. I read this quote from our VP of Strategic Finance, and two things really stand out to me. The first is that times like this is where flexible staffing strategies become mission critical. They provide organizations essential room to adjust quickly, scale up and down without the burden of excessive long-term costs. And the other thing is that the staffing industry is undergoing a digital transformation. 13 of the 20 largest firms now operate robust digital platforms, including us at Randstad. Our app, the Randstad app, has not only surpassed 1 million users, but it's now facilitating over $2 billion in revenue. In transactions. Michael and Kim, from your perspectives, what are some market signals that really stand out to you all right now and why?
I can jump in here. I think for me, it's that uneven momentum that we're seeing. So, uh, 2 months of growth within the manufacturing industry has come to a stalled performance, I guess, over the past month, and now we're starting to see healthcare rebounding. What that tells me is that it's very important for employers to be mindful of the micro trends within their industries, not necessarily the big picture jobs number or big picture unemployment market, but to look specifically within those verticals, particularly within the white collar space.
Very true, Michael. The other thing I'll add, obviously dropping of inflation is helpful, but it is not eliminating or changing the need for employers to be incredibly smart about their cost structures. Obviously, labor is a very big part of that cost structure. And we really believe bottom line improvement will come to companies who get really, really good at doing this.
Thank you both. Let's hear from the talent side of the house. Every year, Randstad produces our Work Monitor report. If you've not seen this report, it's really great. Contact us. We'll give you a way to do that at the end of the webinar. But what we see this year is that employability is now the #1 priority for workers. 3 in 5 are saying that being relevant is more important than being inspired at work. And when we come to think about the word of flexibility, time autonomy has now overtaken location as the most desired benefit. We see a lot of employers mandating a return to full-time on-site work, and for there, we're seeing expectations even higher. 25% of talent want a flexible schedule, 64% want higher pay, and 61% want more annual leave. So this is a moment to really realign. By offering flexibility, fairness, and future growth, employers can start to build trust and engage with talent that last. But there's a trade-off, and I think, in our Work Monitor we report we see this trade-off. 67 of our talent are prioritizing employability over remote work. 59% are prioritizing flexibility over a higher salary, and 60% would take less pay for less stress. And we've actually already seen 40% that have made that step in what they're looking for. When we think about flexibility, long-term commitment is, built with these employers through a few things that you can do. One being annual raises in line with inflation, the other being managerial support to help people grow, and then finally, the value alignment that happens with leadership. So if you want to make sure that you're keeping your top performers, you need to think beyond the perks and really invest in the whole experience of work. Like I said, we go into great detail in our Work Monitor report, and if you've not seen it yet, definitely reach out and we would be happy to review and share this with you. But I want to give Wendy some time because when we think about the legal landscape, it would be great for you to help us demystify what some of the employers need to know right now.
Sure. Thanks, Jeff. So as any of you know, in the HR space, compliance, legal space, it is a very, very busy time. My colleagues and I sometimes joke that it's COVID-like in the avalanche of new laws that we are dealing with. And we're going to focus on 3 main areas today: immigration, AI regulation, and the executive orders on DEI that have kept all of us very, very busy and all of us on our toes. Being adaptable is certainly a skill that I've needed to employ as a general counsel for Randstad, and I'm sure all of you have as well. The shifting immigration policy is creating a lot of uncertainty in the labor market, especially for companies that rely on this labor pool. As any of you are keeping an eye on the situation know, just this Friday afternoon, the Supreme Court came down and once again shifted our policy back with regard to parole and temporary protected status workers in the US. And those shifts are not minor. You know, the DHS comes out with a notice, then the courts intervene, and we are left here as employers trying to keep up with what the latest and greatest is. And when you impact 850,000 lawfully working folks in the US, that is going to have an issue in the labor market, especially in a tight labor market. Business continuity for our end clients and for our own corporate offices is a really big deal. And when you increase the variable of relying on that big a swath of workers, it can have a serious impact. And then you layer on the legal challenges where you do not know day to day where your talent, where your end clients stand in terms of their business continuity. It is a challenge. Similarly, there's a little bit of schizophrenia in the world of AI, right? AI regulations are ramping up at the state level, while at the same time, the federal government is seeking to shut down and deregulate AI as much as possible. So there's state laws that are going into effect in several states in 2026. California, Illinois, Colorado are ahead of the game. And at the same time, our executive orders are saying we're going to deregulate AI for federal agencies. And the bill that just passed the House put a 10-year moratorium on state AI laws. So what are employers to do? National employers like Randstad need to be, ahead of the curve for both federal and state laws. And so we are stuck currently with no federal AI regulation, no clear direction, but that does not mean there's nothing to do. Employers do need to be prepared, and they need to start getting ready, especially in states that already have AI laws. But keep in mind, regardless of existing or emerging AI laws, there is a federal and state employment laws that require all employers to make sure that their hiring practices and their procedures do not discriminate or violate the law. And that's true whether that's being done by humans or AI. So employers should absolutely continue to ensure that AI is being implemented fairly and doesn't alienate or improperly reduce your viable and tight talent pool in order to comply with those existing laws. And then finally, for any HR professional, legal professional, compliance person in the room, the executive orders issued by President Trump on DEI have put a real magnifying glass on this issue. It has caused employers, including Randstad, to evaluate their recruitment and talent engagement strategies. And many companies have had to expend significant time and attention assessing their programs, their website, their training programs, the BRGs, and their sales and marketing assets. That takes a lot of time and energy. And when you have tight workforces or you're trying to keep the bottom line tight, your headcount is also being strained. And ironically, in some ways, the AI laws and the executive orders are really overlapping each other in a weird way. On the one hand, there's been a real push against collecting applicant data and demographic data to comply with the executive laws, while at the same time, the emerging AI laws are asking employers to make sure that there's no disparate impact to workers in the use of AI. So it is quite complicated and quite difficult to make sure you're getting it right. For me, the bottom line in this period of uncertainty is just preparation and agility. It is important that you work with teams with a compliance-first strategy and make sure you have a strategy in place now. Don't wait for an auditor or an enforcement agency to come knocking on your door.
Great, thanks, Wendy. I'm not seeing any questions come in, so as a reminder, and I'm sure you have many, especially hearing some of those things from Wendy, definitely drop them in the chat and we will try to get to some by the end of the conversation. But, what could be a few practical things that employers could do right now, Wendy?
Yeah, I think while we get clarity, it's time to prepare, right? Rely on business partners, rely on vendors that have a compliance-oriented, compliance-first strategy, that they will stay ahead of the developments like Randstad does, particularly when it comes to immigration and work authorization in this period of intensified enforcement actions that we see on the news every day. It is really important that your I-9 vendor and that your talent contingent labor supplier are ahead of these curves and understand how to flex with the evolving immigration policy. In the terms of AI, I think the best advice I've gotten, and I'll pass on to you, is start your inventory of AI tools now. Understand what your company is using. What is AI enabled? What vendors are you using? What do they use? How do they use AI? So that your company understands the scope of the issue, and when the new laws go into effect in 2026 in the state laws, and inevitably there will be copycat legislation, you are prepared to execute because you know the universe of tools in your company's stable in terms of what has AI, what doesn't. And if you have not already assessed your company's DEI initiatives and programs and your related contractual obligations that you have with subcontractors, now is the time to do it. Whether you're a federal contractor or subcontractor or a private sector employee, you need to get your arms around it. So understanding whether you are now in compliance from both externally facing situation and internally facing situation to make sure that you're in line with the DEI executive orders that have come down.
Great. Thanks, Wendy. Michael, I want to pitch it over to you to go over some of the things that we've chatted about that you are seeing right now in the professional sector, and what are some things employers need to be aware of?
Sure. So I think one, just following Wendy here, we're all impacted by the macro environment, the legal world that we live in today. So that's certainly going to be part of what you'll see here. But to start things off, what we continue to see is the understaffing within our clients. So after highs within staffing levels in 2021, 2022, we're starting to see some very lean operations happening, with 40% of executives reporting that they're currently understaffed and they have urgent needs that need to be filled. The challenge isn't necessarily just with finding the appropriate or correct skill set for the role, but finding the person with the right mindset, someone that wants to be with the company long term and understands the values of the organization and embodies those. Right now, what we see are individuals that talent have leverage. They have the probably more leverage than we've ever seen before, and they're prioritizing compensation, work flexibility, and that comes at a high cost. So it's sort of a challenge for the employer at that point. At the same time, what we're seeing are inflation pressures, rising costs, especially within the insurance for our small and mid-sized businesses. And what they're doing is getting creative. They're refreshing their attraction drivers, if you will. They're getting creative in ways of finding work schedules that work for each person to accommodate, so flexible working hours. We even have some clients that are offering a compressed work week, which is something relatively new to the market. We're also seeing, and this is something that I think that Randstad advocates for, which is the prioritization of the development of these individuals, certifications, mentorships, ways to upskill talent is becoming a great attraction, but also a great way of retaining top tier professionals. And I think that one thing that I just want to mention here, and this is going to sound kind of funny, but it's just symbolic of the small things, such as free food, free coffee. There's little things that you find around the office place. And it might sound funny, but again, it's just a symbolic way of saying that the small things do go a long way. I think probably for most of the folks on this call that have taken those away, they understand how big they are once you do take them away. So I think just remembering that is also a great way of keeping and retaining your talent. Now, as Wendy had mentioned, there are a lot of other legal and economic variables that we are watching and paying close attention to, such as interest rates, tariffs, merger activity, the executive orders that Wendy had mentioned. And while these are creating market jitters, it's also creating some sort of optimism in the long term, specifically within imports and exports. Clients are cautious now due to the expected lower volumes that they're expecting to see or anticipating seeing, but they do have positive outlooks on the future. Same with the steel and automotive industry. So what we see there is a very optimistic way of looking at the global market and have more of a level playing field. all while taking a look at current costs. And then in the healthcare sector, the executive actions and orders on drug pricing that could significantly reshape the future of the workforce needs within healthcare. So, despite the current economic uncertainties, the demand for top talent is high, especially within finance and accounting. It remains high, it will continue to remain high, and unfortunately, it is the lowest levels of unemployment out there. So it makes it very difficult to find great talent. So what we're seeing are clients that are very high on their expectations of talent, and they're missing out on those that meet maybe 3 or 4 desired traits. My word of advice or caution there would be to pull the trigger when you find the right person and develop their skill sets, because that's what other organizations are starting to do now, is to focus on that development piece to close the gap within the current talent pool. And then the last thing that I have here, Jeff, is the digital transformations that some organizations are going through that can be very costly. There's one big one that's probably top of mind for many people right now, and that's the SAP S/4HANA. And while it comes with tremendous benefits and it's a great product for organizations, it does come with some hurdles, and clients are navigating the complexity of the cost migration, especially for those that are using legacy systems that have many different parts over the years that they need to transfer into the new system. While doing that, it's looking at user adoption as well as bridging any skills gaps. We have a dedicated team through our financial projects group under Tatum that are currently actively partnering with many clients as we speak, providing solutions to overcome these challenges that we see here. So just a few insights there, Jeff.
Thanks, Michael. I was just checking out the questions, and I saw one from Patrick, and you mentioned this a little bit, but how is AI impacting professional clients and the talent specifically that you're working with?
Yeah, so AI is extremely fascinating. It's interesting, and it's piqued a lot of curiosity within many employers. What we see currently, areas like accounting and payroll services, they've seen declines in job numbers, which could indicate shifts in demand or necessarily automation through AI. What we see on a local level are that AI is not necessarily taking over jobs or departments, but employers are finding a way to leverage AI to enhance and improve workstream efficiencies. And I believe that that trend will continue.
Okay. Any other pieces of advice for employers from your perspective before I pass it over to Kim?
I think I think right now it's focus on fit, hire now, don't wait. There's a lot of yin and yang with what we're seeing in the marketplace. I shared on an earlier call that the Atlanta Fed shared their revised Q2 GDP numbers, looking at 4.6% growth compared to 3.8. In a normal world, we would all be celebrating. We'd say that that's fantastic. But the naysayers, or the other side of that, is why are we having that growth? Is it related to cost of tariffs down the road and people are increasing their supplies now? So there's a lot of back and forth. And I would just say, if you have the right person or if you feel like you have a good fit, you need to pull the trigger now. Somebody will, and they will be off to the races whenever they get some wind behind their sails from an economic standpoint.
Great.
Thanks, Jeff.
Kim, what are some of the trends emerging with some of the clients in the operational side of the house that you work with?
Yeah, so basically, what we're seeing is that there's a lot of uncertainty, obviously, largely due to tariffs, of companies trying to figure out what their supply chain strategies are. And the margin pressure is really front stage for everyone. So that can translate to job cuts, consolidation of facilities, et cetera. And really what that means is that we have to get super strategic on labor cost efficiency. And that's where we're really trying to focus to help our clients. I think probably a lot of people are on this call are familiar with that, but it's like, okay, so how do I do that? I think what's really exciting is that in the past, when companies were trying to cut cost, it was often at the disadvantage of the worker, meaning I lost hours, I lost my job, etc., and not in a way that benefits my life. What I think is more exciting is in today's world, if we pay close attention, there are actually things that you can do that are advantageous for both the employer and the employee. And that's what makes me optimistic about the future. Just to kind of give, I guess, a couple examples in the few minutes we have left. There are a lot of programs in the local metro areas, whether they're through skilled trades or local community colleges, even in the high schools, that companies can take advantage of new workforce pools that are interested in earn and learn opportunities, meaning you can help build your workforce of the future by paying less money either on wage or hours worked. And securing part-time workers as a part of your labor strategy. So I'm excited where the country's headed in that regard. The second category would be a lot of companies are faced with retiring boomer generation employees that have really critical skill sets in their organizations. And some of these people, for not just economic reasons, but just wanting to stay in the workforce, might be interested in working part-time. Not only to keep your operation going, reduce costs for you by the willingness to work part-time, and also perhaps help to train their replacements through internal career pathing. And then the third category, which I think is equally important, is that a lot of dual income families are faced with rising costs of childcare, which has become quite unbearable in many situations. And really understanding the schedule needs of your clients. Perhaps there is a win-win scenario to adjust hours down where there is a cost benefit to the employee having to pay less for childcare, while again helping you reduce costs to the organization. So I think what I would just leave everybody with is like, it's a great time to get out of the box about our old ideas of how we do things. And the more that you can make them mutually beneficial to your organization and to the employee, you're going to build resilience, you're going to build loyalty and retention, and I think really see the bottom line results that you're trying to get.
Great. Thanks, Kim. I know we have 2 minutes left, so there are a few things I want to leave everybody with. From a key takeaways perspective, I think across what we heard from Wendy, Michael, and Kim is that you've got to stay alert. Make sure that you are understanding the macro policy shifts. And how they are going to impact your business. I think flexibility is no longer an option. From frontline to finance, workers want flexible schedules, modern benefits, and career mobility. Compliance is becoming a differentiator as we think about AI laws, immigration changes, DEI scrutiny. Risk mitigation must be embedded into your workforce strategy. Invest in resilience. I think Michael just said it really well. Hire now, not wait for recovery. And then finally, competitive pay does still matter. In this series, we have been sharing our ADAPT model. We have it here, making sure that you're focusing on agility, differentiation, AI and automation, people development, and talent pipelines. We're going to share this again, but we also are going to be sending out for people that join today our market pulse. Look out for that. Review it. If you want to have more conversations, please reach out to us. We would love to continue the conversation we started today and understand you, your business, and some of the pressures that you are facing. We have ebooks available on our site, Randstad. If you Google Adapt and Thrive, you will find the Adapt and Thrive website that has a lot of other resources. But I wanted to thank Wendy, Kim, and Michael for joining me today. We hope that these key takeaways help guide your workforce strategy through the months ahead. Thank you so much, everybody.